Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking back in on the MJ space. Today was marked with dip buying. So dip buying mostly in the major Canadian MJ names, and there's still this faint breeze in the air of sentiment change. It's clearly not here, but I'm seeing what would need to happen to see that sentiment change take place. The most notable setups right now are APHA and CRON. We'll look at those in just a second, and we'll do our normal rundown here. So looking at CGC, we have our key support of 38.38 holding, and a big dip buying opportunity today. I posted a live trade review, and essentially it was just my live stream from the morning that I do for members, and I edited that down for the way that I traded CGC this morning, and it's a great example of my style, just in terms of scaling out partial profit, putting stop losses to make the trade risk-free, and then ending up locking in Daymaker Plus. So check that out on the YouTube channel if you're interested. But the bottom line is the bulls held support, and we closed near the high of the day. Now, this is a great sign of defense, but we're not seeing offense yet. And I've been using that analogy more and more because we have to see resistance breaks. We have to see trend changes for bulls to go on offense. So I can look at this chart and say, great hold of support, nice buying of the dip, but anything under 43.94 is just a lower high. And with where we stand right now at 40.57, that's still a ways away. That's over 5% away. So we can anticipate that when we follow through with this bounce, if we follow through tomorrow, we will still likely form a daily lower high, and it's not likely that we're just going to see a straight shot up and break 43.94 from this double bottom hold. In my opinion, if we were going to see a daily trend change, it would look something like this with a lower high. Then we need the higher low. Then we need to change the daily trend, which has not happened on CGC since we started pulling back from 52. CRON stood out with this dip buying as well. CRON is a bit more of a tightening pattern. The bounce has been more significant, and we held support. So we have our low, high of the bounce, higher low, lower high, higher low. Anything under 1690 is a lower high. So we have about 5% that the bulls have to see to even get to resistance. If we top out, we'll look for a lower high compared to 1690, a tightening range this week, and a break by the end of the week. And if not by the end of this week, we're going to look for this pattern to break into next week. The pattern here has significant implications. If this pattern were to break bullish, the odds that our monthly high or low that we have been watching for on CRON for a couple months now, if it breaks bullish on the daily, the odds that this is our monthly high or low and we're going to get follow through from it will be significant. If we lose support and see a bear break, we're going to be looking right back down at our recent low. The weekly time frame, we had our low of the pullback, high of the bounce, little higher low is trying to form. Bulls have to break 1786 to change the weekly trend for the first time, essentially since we failed this all-time high back at 24.37. So the notable shift, the setup is there. We don't have the notable shift yet. The bulls have not gone on offense, but we can lay out the scenario of what would be required to make that shift happen. And you better believe that headlines and narrative would shift to match what the price action is doing if we do see these bull breaks. ACB, again, buying the dip, but bulls aren't proving anything on the daily time frame. We broke 713 and got no follow through, so that's a good sign for the bulls, but anything under 769 is just a daily lower high, and we have a setup right now on a lot of MJ names, both Canadian and US, where we're in clear daily downtrends. We know we need daily trend changes for the bulls, and we have a visual guide of these exponential moving average resistances. These are the 12 and 26 period moving averages. So essentially what has to happen on a lot of names is we need to change the daily trend, and if that happens with the current setup, we would gain the exponential moving averages as support as well. And for a lot of names, these exponential moving averages have been resistance for 6 weeks, 8 weeks, or more. So if we were to see ACB change the daily trend, again, a bounce would be great. Taking out as many resistance levels would be great, but we must see the higher low and higher high pattern and get over these exponential moving averages for it to have any kind of significant sentiment shift. We've been consolidating on ACB at this point for 3.5 months. We are looking for a monthly higher low to form in this tightening equilibrium, but we have to change the daily trend and get follow through to have any implication that monthly higher lows might be forming. APHA stood out as a lead bull today, and it was very clear early on that something was up, and what it was hitting the new high of the day at 10 a.m. And if you looked at what CGC was doing at 10 a.m., it was a much, much different story. Here is 10 a.m. on CGC. So CGC's oversold bounce got going, and APHA took that momentum from the sector, which all started to bounce at that point, and really ran with it. And APHA was the lead Canadian MJ bull today, very clearly. And it was an interesting end of the day because APHA ran the hardest, and then we saw profit taking in the last hour of trading, whereas CGC, CRON, and ACB, who were laggards to the strength of the APHA move, then saw a close at the high of the day. So it's almost like money left APHA, but kept coming into those other names. It wasn't a significant pullback, but it was a little 1.5% pullback. So we have this equilibrium we've been watching for weeks at this point. I like it better on the 2-day time frame just to smooth some of this out. So if we want to be looking nice and smooth and clear, high of 768, low of 7, or make that 629, lower high of 760, higher low, we held support by 6 pennies. Significant bull move is putting us back into the middle of this range and keeping this equilibrium alive. So again, just like CGC and CRON, who have 5% plus to go to get to their resistance, 760, we need 7% or so to get up to that resistance level. So the odds are we are likely to set a lower high and see these ranges continue to tighten this week. So if this pattern were to break bullish on APHA, let's just say for argument's sake that we set a lower high, we come down and set a higher low, and then we get our bull break. That would get these exponential moving averages back as support. They've only been resistance for about a month at this point. That's less than most names, but it would be notable. And again, monthly timeframes for most of the MJ sector, aside from a few names, we're looking for monthly higher lows to form. And if we were to break that pattern bullish on APHA, the odds that our monthly higher low compared to 375 has formed would increase a good bit. So that's something we're watching out for. And APHA and CRON have the clearest tightening patterns out of the major MJ names. And we're going to be watching those names close over the next 2 weeks. TLRY topping out a bit, unable to break the high of 5103 first thing this morning, which was a clear bear setup. The psychology of that setup is when you are unable in the first 15 minutes of the morning to break a key resistance, bulls who are still holding positions from Friday take profit, and bears top fish. I could jump in bearish at 560, set a stop loss at 51.10, be risking 50 cents, and we ended up pulling back almost $4. So the risk to reward is there for that trade when you fail to break resistance first thing. If we see a bear break of the daily inside bar tomorrow and break 46.75, we're going to be looking for a healthy daily higher low to form compared to 38.70. Bulls have a lot of space to work with, and again, the size of the bounce that we've seen at this point, the psychology of this market has me believing that our low on TLRY has likely already been hit. Why do I think that? Just a real quick explanation. The amount of the pullback that we would need to drop to lower lows is almost 30%, 29-30%. We have the narrative being spun in the MJ sector amongst retail traders and the social media space and investors. Sell in May, go away, summer lull. Anybody that follows that narrative has sold long ago or has sold and sold the bottom at the capitulation point. Either way, who is going to be selling now if they did not already sell? Yes, some people, but not a significant amount of people. So in my opinion, all the sellers were flushed out. We priced in the summer lull in advance, and we're going to be watching for the potential of the bulls to shift momentum a bit early, a bit before the fall. So if we were to get follow through on the bull breaks of these patterns for APHA and CRON, I would expect TLRY to continue its bounce. Look at the cross. 12 and 26 period moving average on the daily, crossing bullish for the first time in a very long time. When is the last time that bull cross happened? It never happened. From inception, we started with those moving averages appearing, and we were bullish into the all-time high. We got the bear cross of these moving averages in when we were trading at about $80, $80, $90, and it has been bear ever since. Every time we have attempted to see a bull cross, it has rejected. And here we are with the first bull cross, and we just need a bit more follow through, because if we were to pull back with 2 more red days in a row, this cross would erase. It wouldn't get any follow through. But if we pull back with a higher low and then make our way back up into the mid 50s, then that's going to be a cross that we're certainly paying attention to. On the monthly time frame for TLRY, we are just looking for a monthly lower high to form, but if you are familiar with the cryptocurrency space, TLRY had a ton of similarities with Bitcoin because it is just a clear hype cycle, euphoria, and when the shift took place, when Bitcoin changed its weekly trend, we then ran 250% in a couple months. So we now have a daily trend change for TLRY, and if we can get a weekly trend change, we will look for that sentiment to continue to shift, but the first trend change coming off of a massive pullback from a hype euphoria market into a fear and despair market usually gets some decent follow through. And of course, at this point, we've already seen decent follow through. We got a 50% bounce off the lows. Question is, what can the bulls do from here? OGI, nothing going on. So I'm not interested in OGI. If the sentiment shifts in the space, we'll anticipate that it will trickle down to almost everybody in the space. But at this point, it is up to the leaders to lead the way. Canadian MJ Bulls, CRON, APHA, our eyes are on you to set the tone. Anything under 661 is just a lower high. We've got support at 610. So I'm watching 610 to 661 until one of those levels breaks. I could care less what OGI is doing because there's not much of a setup there. Hexo dropped down to a lower low. Keeping in mind that both Hexo and OGI are coming off of their all-time highs more recently than most MJ names, and they also are still in monthly uptrends. So we have a new daily lower high and a new line in the sand, 593, that the bulls are going to have to break to prove anything, and we're continuing to pull back. So there's no bottom yet on Hexo. We're looking at the monthly time frames testing their exponential supports, and we need a daily trend change at a bare minimum as signal number one for the potential of our monthly higher lows being set. TRST, trying to change the daily trend. 650 is our low. We had the high of the bounce up to 729. We held support, a couple candlesticks here with lower wicks of bulls buying the dip, and now we have to see a break of 729 to change this daily trend. If we change that daily trend, we are looking for a monthly higher low compared to 594 due to the size of the pullback. I anticipate TRST, if we do hold 594 support and get some bounce, we're just going to be looking for a monthly lower high, and I anticipate we'll stay within this monthly equilibrium if we do get bull follow through, probably into the end of the year. But we're missing that bull follow through at this point. Bare minimum step number one, and this is what I'm talking about with the exponential moving averages. So exponential moving averages on TRST have been rejecting the price essentially for 2-3 months. And changing the daily trend, which has not happened on this entire pullback, would get those levels as support if we were to get over 729 and look for that bull cross of those exponential moving averages. VFF dropping to lower lows. Bears now have very firm control. Gap to fill, 1504. We filled it, and now we're looking down at 1390. So from a weekly perspective, I'm looking at a high, low, lower high, and the bulls have to form a higher low compared to 1312. And this is another scenario where if you smooth it out and we look at the 2-week time frame, it's a bit more clear. Look at the volume drop off, perfectly normal and expected when you're in an equilibrium. So high, low, lower high. Now we're looking for the higher low compared to 1312. And the bulls have a lot of space to work with. We can pull back 10% and still be at that support. So keeping an eye on this weekly range. If this weekly range were to break bearish, then we need further monthly consolidation to find the higher low. If it were to break bullish, then there's the potential indication that our monthly higher low has already been established. VFF definitely on watch, but because this pattern is a 2-week pattern, it could end up tightening up for another 6 weeks or so. More than that, 2 months. T-God. So looking down at support, again, another name rejecting from daily exponential resistances. We've got support of 313. The bulls have to see a break of 342 to change the daily trend and get over exponential resistances. Right now, the bulls' backs are against the rope. They're trying to play off. They're trying to play defense. They're not even thinking about offense at this point, and it's all about that 313 support level for the next couple of days this week. So again, just want to be very clear. We are not seeing signs of these bulls. They're not proving anything to us, but we have the setups to see what has to happen for those bulls to prove things to us and for that sentiment shift to occur. VGW is now earning its spot back in the weekday videos for reasons being it is a strong name. It is a monthly, really strong chart looking at a monthly bull flag. It is a daily chart that is trying to confirm a mini little bull flag here into continuation. The bulls have to break 429 tomorrow, and then we're going to be looking up at 437 and 475. Key support is 394. So bulls want to hold 394 for the rest of the week and break 429 to see this continuation move. And again, the odds that our monthly high or low have formed increase significantly with that change in trend if we get it, and it is looking likely that we will get it tomorrow, potentially. But VGW certainly has our attention, and it's set up really well because we know that the spotlight is going to be on extraction plays heading into October, December, the fall for Canadian MJ. And if this chart just holds up, it's going to be in a great spot. So if we see anything on the weekly under 475 is just a lower high, we can set a weekly lower high compared to that level, pull back from a weekly higher low around $4 or the upper $3 range, and then just bide our time as we get to late summer. And I guess it would be August or so that we'd be looking, and then a bull break. So if we see a lower high, no big deal. Then we need the weekly high or low and trend change to be looking back at the all-time high right in time to be heading into the fall. IIPR, significant pullback the last 2 days, but a solid bounce opportunity. We broke the low of Friday, but by less than $1, and the bulls very quickly turned that around. So looking at how that shaped up, quick flush on the 5-minute time frame, double bottom, lower high, higher low, bull break in a huge way. And again, from that double bottom low, that's a very quick 7.5% in just about an hour of trading. So on the hourly chart, don't like the clarity. So looking at, essentially we can treat this like a daily inside bar. I like the 4-hour time frame for the clarity here. Anything under 137.78, the all-time high is a 4-hour lower high. If the bulls can make their way up over 130 or up to 130 tomorrow, then we'll have a 4-hour equilibrium setup. I'd be shocked if the bulls could go straight to a new all-time high from here. So I would anticipate the more likely scenario is that if we get some follow through tomorrow, we'll set a 4-hour lower high, and then we'll pull back and tighten this range into mid to end of this week. OH. So now we're going to look at the stronger of the USMJ names. We'll look at CL, CWeb, and OH. Let's start with CL. So CL is still a potential daily bull flag. Very low consolidation volume, tons of space to work with for the bulls. If we break $14 at this point, I think I laid that out in a previous video as the psychological level and the visual level where the bulls want to hold that to be a bull flag. If we break $14 with a spike in bear volume, the odds of a daily equilibrium would be more likely. So we can gauge the strength of the bulls by what consolidation looks like. If we pull back here, then we're looking for an equilibrium. But if we pull back and hold $14, we're looking for continuation. So holding this level is key for the bulls, and if we can hold 14.25 and break this inside bar bullish over 14.60, over 14.64 tomorrow, the odds of the daily bull flag will increase even more. Again, getting over exponential resistances, and CL on the monthly time frame looking similar to VGW. The difference is we did have a much longer, lower wick, but it looks like our monthly higher low is forming, and confirming the daily trend change would make that more likely. CWeb pulling back more significantly. So here's a difference. Bulls really want to start showing up here, and I believe $18 was the level I marked for CWeb that the bulls want to hold for a potential continuation pattern. So if we see another red day tomorrow, again, we're moving towards the likelihood favoring an equilibrium rather than the continuation move. Bulls want to hold support. We closed fairly weak. So if we get follow through below 1780 tomorrow, odds of an equilibrium on the daily increase more than the odds of just a bull flag into continuation. Again, daily exponential resistance has been rejecting the price for 6 weeks or so. We are now trading right around those levels, but we need the daily trend change to clearly get over them and see a bull cross of those exponential moving averages. Last time we had a bull cross of those exponential moving averages, we kicked off a 100% bull run. Certainly wouldn't be expecting the same thing, but it would be notable. OH, rejecting from daily exponential resistances. If we change this daily trend with a hold of 760 and a break of 930, we will get over these daily exponential resistances and turn them into support. That is what the bulls have to pull off this week. If we pull back and break 850 tomorrow, I would say that a higher low and then tightening range is the more likely scenario than the continuation move. Hold 850 tomorrow and make our way back up towards or over $9, then the odds of a daily trend change will remain in play. Cureleaf, still not doing much. Daily exponential resistance, rejecting the price for 6 weeks at this point. Bulls must hold 938 and break 1053 to change the daily trend, get over the exponential resistances. You catch my drift as far as the setups that we have on a lot of these names. Again, not proving anything for the Bulls. Bulls need to show up and prove something to us. We know what has to happen, and we're not going to get faked out, because if this criteria does not happen, then we certainly don't get too bullish. TRUL is now pulling back significantly. The close at the low of the day. Again, the hope for the Bulls would be an inverse head and shoulders pattern here, but this is more pullback than the Bulls would like to see. 1335 to 1517, essentially $1.80 move. And at this point, we have now given back we've given back a good bit of it, almost half of it. So we have to hold 1335 and we have to break 1517 to change the daily trend. IAN still weak. There is a pattern I'm watching on IAN. I've talked about how I am not looking to re-enter what I sold up here until I see extreme RSI levels. The weekly RSI is just at 30. The daily RSI is just under 30. The 4-hour RSI is just at 30. The hourly RSI today was just under 30. So that's not extreme. If you want to see extreme, just scroll back a little bit. Hourly RSI hit 11. 4-hour RSI dropped down and hit 18. That's extreme. That's when I was playing the bounce. So we're not extreme, but there is a pattern I'm watching. And it is a falling wedge. So we have our declining support. And this pattern is not as developed as I would like it to be. I'm pointing it out a bit early. But there she blows. And we've got our... I would like more touches on these lines, essentially. But we could call this 3 touches to make it a valid downward sloping support line. And we've got a few rejections. We only have, 2 little periods of rejections. Ideally, there'd be one more. So if we get a bull day tomorrow, as we saw a little bit of buying into the end of the day, we're just going to be looking at the potential to reject from this resistance downtrend line one more time. But I would look to enter... The only scenario I would enter IAN other than extreme RSI levels again would be if we see a bull move up tomorrow, and if we reject from this resistance, and if we drop down again back towards the low, I would start to enter some positions. And that would just be anticipating the potential break of this pattern, which is a bullish leaning pattern. It can break bearish. It definitely favors a bull break. The criteria is essentially that you're breaking support and not getting much follow through, and it's an indication that sellers are getting exhausted and we're running out of sellers. And when you stop having any sellers, that's when the turnaround happens. And that's what happened with CGC today. Everybody that was going to sell or go short because of earnings did so by the end of morning today. So they had all Friday to do it. They had all morning for the first hour of trading to do it. We hit a point where there's nobody left to sell now in reaction to earnings, and then the bulls showed up. So it would be a similar psychological setup for that if this pattern were to break bullish. Still remaining skeptical of the bulls unless we break 442 and 478. MedMen still on watch. Daily inside bar. The bulls want it. They're right there. No volume today. If we see the inside bar break bearish tomorrow, we're going to look for a higher low and a continued tightening range. This is another one to watch for its tightening range. And again, daily exponential resistance for months, starting to close in on the potential of a bull cross. And if we see the bull break of 311, we will turn these levels into support and we will see a bull cross follow through. I'd like to see one more little daily higher low. The tighter, the better. If I'm sitting all cash, I want things to get real tight. But MedMen, CRON, APHA have some really nice tightening daily patterns to be watching. Watching that IAN falling wedge. And again, just want to be very clear. The bulls are proving nothing to us yet, but we know what has to happen for them to prove it to us. And that would be the sentiment shift that I have been keeping an eye out for. Thanks for watching. Do good things. We'll see you tomorrow. End of the video. Video today is coming from a little walkthrough of the property and my plans of what I'm looking to do, transforming things into more of a little mini farm, permaculture based thing. I have friends of friends who have degrees in permaculture, so this video is something I made to somebody who's going to come out and do a walk around with me and give suggestions. So just pretty much documenting the start of things before I start changing things. Looking to have a hobby farm with spots to grow annual food for myself and to share with others. I'd like to have chickens and goats, and open to any and all suggestions. The property is 3.5 acres. It was owned by a career landscaper, so it's in pretty pristine condition in that regard. And there's ponds and features, but 3.5 acres, most of the land's in front, the corner, back left corner here, the property line ends, and it comes along the side here, and it goes out over a couple little creeks. We'll do a whole walk around in the circle, but the best spot for the sun in terms of lack of shade appears to be right around here. So I was thinking potentially just doing a bunch of raised beds in here, and there are deer around, and as you can see there's geese around, so potentially fencing that off with something permanent and wooden. But a good amount of space for those raised beds here, and then there's another spot here along the side to put a couple in. So we got 2 ponds. This is the first one. It is about 5 feet deep. It was stocked at one point. I'm trying to throw some food in and figure out what's still in here. He said some catfish and potentially some carp, and certainly a bunch of frogs. It looks pretty well established as far as doing its thing and maintaining itself. There's not many mosquitoes on the property. I would like to put a couple bushes perhaps on the other little pond that has less around it that would encourage dragonflies. And I'm gonna put a swing here that has some sides going up it. I think it's cedar and finished, so definitely would rot eventually, but I'd like to trellis something up it, perhaps hardy kiwi. I like trellising things a lot, so we're going to be doing peas and cucumbers and all that stuff, but certainly open to suggestions. We'll go on the other side of the creek here. The property goes about 5 feet on the other side of the creek, and here's just one little offshoot of the creek. That one's pretty low, other one's bigger. I was considering bamboo because I want it as a resource for building or trellising or whatever, and I also like to have it for goats in the winter to give them something green, but I'm also not sure if I want to pick a fight with trying to contain bamboo for the next decade. So this is the main portion of the creek, and it does get pretty good flow, and it goes pretty much along the back of the property line, but like I said, 5 feet on the other side. There's another good decent spot of sun up here in this little open part of the field, and I'd like to have blueberries and figs. We've already got raspberries and grapes on the property, which I'll show you, but this looks like a pretty good spot to perhaps throw down a half dozen figs, half dozen blueberries, whatever we could fit. But other than that, the majority of the land in here does get a bunch of shade because there's some big beautiful trees. So we're now walking. We've got the pond we just looked at, and then there's a barn up there we'll look at, but there's a smaller pond. It's more shallow. I think it's only about 3 feet deep, and this is the one that doesn't have as much around it, so perhaps putting some beneficial plants to encourage more dragonflies. There's certainly a few around. This one's mostly just frogs in here. And then both of these ponds are connected, and they lead to a little runoff that goes to the corner. This is the back left corner of the property if we're facing out the front door of the house, and it just runs and meet ups with the creek there.